going to do an update on gold this morning. The close above this September high potentially negates this failed breakout right here. The banks, which have a massive short position, are in jeopardy of getting caught in a short squeeze. I told my subscribers on Friday, let's wait and see what happens Monday. There's going to be an attempt by the plunge protection team to rescue the stock market. Remember, we've got an FOMC meeting on Wednesday, and then we've got the State of the Union address early in February. So it would be infinitely better if the stock market was not going down or in some kind of a crash event ahead of those two, the FOMC meeting and the State of the Union. So that meant that we were going to almost certainly have an attack on the gold market Monday morning. So I want to see if that attack can get beaten back or whether or not it succeeds. The banks need to get gold back below this support and resistance zone at 1567. They started hitting gold from the minute the market opened. They are hitting the miners exceptionally hard, and that has been their target lately, is to attack the mining stocks, especially the mining ETFs. If they can take those down, it's possible that gold could follow. So we're kind of on hold at the moment to see whether or not this breakout back above this important resistance zone can hold. I also want to see whether the plunge protection team can rescue the stock market. All right, switch over real quickly here to the stock market, where stocks are in the timing band for a daily cycle low. They're also way overdue for an intermediate cycle low. Take the plunge protection team out of the picture. This probably would continue to crash and give us our intermediate cycle low, which would probably be somewhere down around the 200-day moving average, which is roughly at about 3,000. That's where we would go normally without any market intervention. But as you can see, we're having a major intervention by the plunge protection team to stop this sell-off. It's too early to tell whether or not they're going to succeed. If they do succeed, and if they can get this market moving back up in time for the FOMC meeting on Wednesday, and especially the State of the Union address early in February, then it's going to require another full daily cycle before we can get our intermediate decline. So how we close today is probably maybe going to be important as to whether or not stocks are rescued, and then we have to continue this for another 40 days before we get our real significant pullback, something that you can buy with confidence. And we're going to have to see if the metals can fight off the banking cartel manipulation. You can see they've managed to push the mining ETF negative, even though gold is up. I don't think that would ever happen naturally. And I've been warning that they would try and attack the mining shares now. Their short position is way too large to keep adding more and more shorts in the gold market. So they've got to try another strategy. That strategy has been to attack the mining shares. So if we end the day here with this reversal candle off of this trend line, it is possible that the mining shares are going to slip into sideways, maybe a triangle consolidation. They might have to come all the way back down here, maybe to this lower trend line, and bounce around for a few more weeks before we can get a breakout to the upside. So being a little cautious here today. I want to see if the intervention in the stock market and the manipulation of the gold market, whether it succeeds or fails, and the outcome of that will probably determine how I want to play the next couple of weeks.